When selling a business, it is very important to understand the headline price is not what you receive in your bank account. In this video, I'm going to visually walk through how we work down from headline price to what you would receive as your net proceeds as a business owner. Now, my name is Kieran McKeever, and for the past half decade, I've worked at the third largest professional accountancy practice in the world. This gave me direct access to some incredibly talented people, whether that be working with the global chief technology officer at Kellogg's, the C-suite of Centrica, who own British Gas, or very senior officials within the Ministry of Defence. I then transitioned to advising entrepreneurial businesses, helping business owners making between 3 million and £15 million worth of profit achieve a first-time exit. So, say you as a business owner work incredibly hard and build a very valuable business that attracts an offer of £10 million. We call this the headline price or enterprise value. Now, many business owners think that this is what you keep in your bank account when you sell your company, but instead we have to subtract and sometimes add a few things to get to our net proceeds, that final figure. The first item that we need to consider is net debt. This looks at the surplus cash minus any debt in the company. In this example, we have a net debt of negative 2 million, meaning the debt exceeds cash by £2 million and will need to be repaid when we sell the company. After this, we consider our working capital adjustment. When selling a business, the buyer keeps the working capital so that the business can continue to function after close. So we need to make an adjustment so that only a normal level remains in the company. And I'll be going into more detail exactly how to calculate this on my next video. Now, at this point, we have arrived at equity value, the value of shareholders' equity in the business. However, there are many more costs to pay to deduct from this value. The first being any advisor costs to complete the transaction. Lawyers, corporate finance, accountancies, all transaction costs that need to be considered. Now, at my old shop, the average deal costs were in surplus of £1 million and shows how complex and the amount of advice you need to complete a transaction. The final cost to consider is the taxman and paying capital gains at sale. We then arrive finally at net proceeds. Now, this example is quite extreme, moving from £10 million down to 5.8 million, but highlights the importance of understanding and calculating what your net possession will be when a buyer presents a certain price. So if you're considering selling your business, there are 3 key takeaways. First, headline price is not what you receive in your account. The second is there are a number of deductions that reduce the figure, and you should be aware of them early ahead of selling. And finally, tax, certainly in the UK, is impacting decisions around selling, and therefore understanding what the value would look like for your individual circumstance is very important.